Peter Eliades with you, Stock Market Cycles update for the week ending Friday, February 7th. This is being recorded on Sunday evening, Pacific time, actually afternoon. It's 5:03 p.m. now as we start to record this, so that would make it 8 p.m. in the Eastern time zone. The rest of you can figure out where you are across the nation. Bunch of things to show you. First, let's talk a little bit about where we are cyclically and technically in the market. Over the past few weeks, we have reached, virtually all indexes have reached important nominal 40-week upside projections, some of them later than others. The S&P came real close to reaching those projections a few months ago. But the Dow Jones Industrial Average, and especially the New York Composite, just reached them fully in the past few weeks coming into the new year. So with that in mind, it makes the market that much more vulnerable. It puts us in a position with the market where some very important longer-term projections have been met. Now, what we spoke to you about was what we called loop projections. These are shorter-term projections that sometimes happen after longer-term projections are met. So if you meet a nominal 40-week projection, that doesn't mean you can't go any higher. There may be a short-term projection, a nominal 10-day, 20-day, whatever, that comes down a little bit and then goes up again and goes to slightly higher highs. We're in that position now. We're in the position where some very important projections have been met to the upside, and we're trying to determine if any loop projections that are calling for slightly higher prices have been given. The projection you're looking at now, this particular chart, is actually the upside projection for the 7 to 8 days nominal 20-day projection. So 7 to 8 trading days gives us a nominal 20-day projection, and that's calling for 33.71 and a quarter to 34.46 and change. And this is on the S&P futures, the E-mini futures. But the reason I'm showing you this chart is to give you an idea what has to happen to invalidate this upside projection. Were this to be invalidated, that would be a strong statement that we have seen some potentially important highs already. These lines down here, they're still quite a ways down. The blue line in here is around the 32.88 level. The red line is all the way down at around 32.50, let's say. So you really would need to get below these lines in order to invalidate this projection. We're going to show you this projection on a daily chart, and we came enticingly close to meeting it on the @ES, which is the symbol TradeStation gives to the 24-hour Globex projections, the ones that trade virtually 24 hours with a little break in the afternoon after the daytime market. So let's also talk quickly about what happened technically last week. On February 6th, we had new all-time high closes on both the DJIA and the S&P cash. They were accompanied by some I won't say very ugly, but not very strong technical readings. The advanced decline line that day was actually negative. The McClellan oscillator that day closed at a barely positive 1.9. The McClellan summation index closed at only about the 669 level. So around the 600 level is areas where on the summation index where you can see some very important tops occur. If they get much higher than that, those summation index readings into the 800, 900, 1,000 and higher, that's telling you that you can reach a top there, but probably not an important top. So we're in that area, the shadowy area now, where fairly important tops can be reached on the summation index, and certainly on the McClellan the McClellan oscillator being at such a low reading as new all-time highs are being registered. Okay, enough on the technical. Let's take a look at some of the important charts now. We'll go to the daily bar projections, and we'll look at the New York Composite Index first. These are nominal 20-day projections that are given by 7 to 8 trading day offsets. And the nominal 20-day projection for the New York Composite calls for As you can see, 14,270.16 to 14,416.84. Now, of all the indicators, the New York is the closest to being able to invalidate. If it gets down, if it comes down here tomorrow, this would be Monday's bar right here, it starts getting down below here, it would call that upside projection into question. Let's take a look at that very same projection now with the Dow Jones Industrial Average. All of these indicators look a little bit different, but they're all pointing to higher prices. On the Dow, and remember, these are intraday bar chart projections, not closing price projections. For the Dow, 29,649.48, let's show that to you, and 29,968.71. Those are the Dow projections intraday. The equivalent projections for the S&P cash would call for and I love this software. You just go there, you click on it, it gives you the prices. 3382.22 to 3406.64. So now you have, for the three important averages indexes that I look at, the nominal 20-day upside projections. I don't think higher projections can be given. We'll look at that at some other time in the next couple of days. But these are the projections that are important right now, because if they're met, they're telling you that with the longer projections already having been met, the nominal 40-week projections, that these could be an important area for tops that we're talking about right here. Okay, so what I'm going to do also is show, well, while we're here, we're on this chart, let me show you how close we came on the S&P E-mini contract to meeting this projection. No, this is not the one. This is the daily. This is at ES.D is a symbol here. But if we go to just plain at ES, it's a slightly different picture, and it's interesting. Look at how close we came here. This projection calls for 3360.95. The high on Wednesday of last week was 3357.75, just 2 or 3 points away from meeting that projection. So at times like this, you've got to be careful, because what can happen is if an important index or indicator reaches a projection, usually you'll wait to see the other ones reach it also. But if one of them reaches a projection or comes very close to it, then you've got to be careful, because you're in an area that is saying, hey, maybe the other ones will not get up there and reach it. At this point, the odds favor all of them reaching those projections. But just this fact that we came so close here calls this whole thing into question. Now, on the Globex, including Globex trading chart, you need to get down quite a bit here. And as you can see, this particular chart shows you where we are currently. It says 3313.50 is where we're trading, and indeed this shows the 3313.50. So this is including the down move that we have in Globex this afternoon, this evening, on a Sunday. So you need to get down still quite a bit today, tomorrow, in order to invalidate those upside projections. Okay, so now let's go to the closing price projections, because they're also interesting, and they, depending on which one we look at, might tell us a slightly different story. Okay, we don't need, no lines are needed to confuse us here. Let's just take a look at the projection. This is for the New York Composite Index closing price projection, nominal 20-day, 14,212.60 to 14,382.98. These are closing price projections. Let's go to the Dow Jones Industrial Average. On the Dow Jones Industrial Average, the closing price projection calls for 29,547.02. Let's bring that up to 29,880.41. Okay, and the only one left is the S&P. So if we go SPX.X and take a look here, Now, this looks quite a bit different than the future, the S&P future, including Globex, because this one calls for a minimum upside projection of 3367.04 up to as high as 3400.54. Now, mind you, these are closing price projections from the daily charts, okay? All right, so let's show you another chart, one more chart to show you what it would take to invalidate. Let's take a look at this chart, which is giving us the equivalent of the nominal 20-day projections on the S&P cash. We'll look at this just out of curiosity to see how well it matches up with a daily. This one calls for 3386.58 to as high as 3435.71. A little bit different than the dailies that we saw. The dailies, I will remind you, said 3382.22 to as high as 3406.64. But the important reason we're looking at this chart now is to show you what would be required over the next day or two in order to invalidate this green rectangle upside projection. And this is into Monday's trading right here, which would be February 10th. And this would be February 11th right here. Actually, right here would be the 11th. So you'll see over the next couple of days, in order to fully invalidate, you need to get below both these offsets, and they're quite a bit lower. The red line for most of the day tomorrow will be around the 3250 level. So you're talking about having to see a 60, 70-point decline to invalidate. So these projections right now look like pretty safe bets. So that's basically it. We've shown you all the nominal 20-day projections, and we've shown you a general area where we could start looking to where they might be invalidated. So we're into a time zone here also. We'll show you these time zone things over the next several days in our updates. Really long-term time zones that we're approaching between now and, let's say, maybe the latest around April of this year. Really long-term time zones that are arguing for potential market tops. So that's it for now. Hope you had a great weekend. This update we're finishing now around 5:17 p.m. Pacific time on February 9th, a Sunday. And we'll talk to you tomorrow with our update for February 10th, Monday. If you haven't subscribed yet, bottom right, please subscribe. We're almost up to 1,000 subscribers. Maybe you can help us get over the hump. And once you subscribe, click on the bell, and that bell will notify you every time we put on a new update, even intraday ones that we might do. Thanks a lot for watching.